we go. Look at that. I'm going to call this meeting to order. It's the fall meeting of the Audit Committee, November 19th, 2021. The purpose of today's meeting is to review the FY21 audit results and discuss any other items of significance, either by the auditor, by the committee, or by management. This meeting is being held in pursuant to and in compliance with ordinance number 20A16, an ordinance to ensure the continuity of government during the COVID-19 disaster. The committee members who are electronically present at this meeting are Board of Supervisor Representatives Ned Galloway, Liz Palmer, County Executive Jeff Richardson, Chief Financial Officer Nelsie Birch. I just, for some reason, gave my maiden name, which hasn't been that way for 7 years, so not sure where that came from.
Wow.
I know.
You can't give me fuel like that, Nelsie. Good grief.
Wow.
Ned, later you're going to need to work with her on what does all that mean, right?
Well, with no offense to Robinson, the auditors, this is probably not a well-attended public meeting.
And last but not least, our superintendent designee is Rosalind Schmidt. Absent at this meeting today is School Board Representative Ellen Osborne, who I believe is traveling today and cannot make it. So with that, I serve as the chair of this committee, and I will be turning this over to Mr. Foley from our FCA to talk through the FY21 audit. And give some reflections on the process and anything that that the committee needs to be made aware of with respect to our audit. So with that, Mr. Foley, I will turn it over to you.
Thank you, Nelsie. Good morning, everyone. We're glad to be here with you all this morning. Again, my name is David Foley. I'm a partner with Robinson Farmer Cox and the partner in charge and audit manager for the county's audit. And with me as well is Josh Roller, who's a partner in our office, and he worked on the audit as well. So we have completed the audit for the county's fiscal year ended June 30th, 2021. And we are here to present the results of that to you all. There's as part of the audit, there's two documents that we do issue. One is the audited financial report, and then also we issue our governance letter. So I will start first with the annual financial report, audited annual financial report. I'm going to go through that, and then Josh will be going through our communication letter. And let's see, it looks like I have the ability to share my screen. Okay.
Yeah, you should, David.
Okay, good. All right. So again, I'll start with the annual audited annual financial report. So this report right now is in basically a finalized draft form. There's a few items in the document that we're still getting pulled together, but the audit opinions and the numbers are basically pretty much in final form. So included, I want to start first with in the financial report. Include in this report, there's 3 different opinions reports from us that communicate the results of the audit. When we met back in the spring to kick off the audit meeting, we talked about how there was basically three main parts of the audit that we do for the county's financial statement audit. One, of course, is we audit the financial statements to make sure that the county's financial statements are prepared in accordance with generally accepted accounting principles. And then the 2 other pieces of the audit that we do. One, and both of those are done in accordance with government auditing standards. One is, in addition to just looking at the numbers themselves, we review the county's internal controls over its financial reporting. And so we'll look at areas where there are internal controls in place, and we'll go through and test those controls to see that they're operating as they should. And then the third piece to the audit is the federal compliance audit. So for the major federal grant programs, as part of the audit, OMB provides a compliance supplement that basically lists all the compliance requirements that the county and school board have to comply with when they're carrying out and expending their federal grant programs. So as part of the audit, we go through that checklist and make sure that the county and school board are complying with those federal grant compliance pieces. So again, as there's three main pieces to the audit that we do, included in the financial report are three reports from us that communicate the results. I'll start first on PDF page 11, which is our independent auditors report. So in this report, as we state, we did perform an audit on the county's financial statements. This report talks about management's responsibility for the financial statements, which management is responsible for the preparation and fair presentation of the financial statements. This report talks about our responsibilities as auditors, which we are to express opinions on the county's financial statements. Also states that we did conduct our audit in accordance with generally accepted auditing standards. And at the top of page 2 is the opinion that we have issued on the county's financial statements. And we have issued a unmodified opinion on the county's financial statements. Basically, an unmodified opinion means that the county's financial statements have been prepared in accordance with generally accepted accounting principles. Basically, an unmodified opinion is the cleanest opinion an auditor can give on the set of financial statements. The other two reports from us are in the back of the report. The first one back in the compliance section on PDF page 183. This is our report over the county's internal controls over its financial reporting. This report was clean as well. We noted no significant deficiencies or material weaknesses in the county's internal controls over financial reporting. We feel that the county does have strong internal controls in place over its financial reporting. And the third and final report from us is included 2 pages down, PDF page 185. This is our report over the county's compliance with the major federal programs in accordance with the uniform guidance. And this report was clean as well. No significant deficiencies or material weaknesses were noted in the county's compliance with its major federal grant programs. Also, no items of non-compliance were noted as part of our audit. So again, all 3 opinions from us were clean. They're included in the county's financial report. So it was another clean audit again this year for the county. So those are the 3 opinions from us. I'd like to highlight a few of the financial statements that are included in the county's report. So if we go back to PDF page 22, this is the Exhibit 3 This is the balance sheet of the county's governmental funds. So this statement reports the assets, liabilities, deferred inflows, and fund balance for each of the governmental funds at the end of the fiscal year. So this statement has a column for the county's general fund, which is the main operating fund, and then has various other columns for the other governmental funds that the county has. So at the end of the fiscal year, total assets for the county's general fund was 97.7 million. And then, as we can see all the way over to the right, grand total assets for the county's governmental funds were a little over 142 million. And then looking down, we got liabilities and deferred inflows, about a little over 16 million for the county's general fund, and then grand total of about 29 million for the grand total of the governmental funds. And the third section of this report shows the statement shows the fund balance for the county's governmental funds. So at the end of the fiscal year, the county's general fund ended with a total fund balance of 81.5 million. And then this fund balance is then further broken down between the various categories. Non-spendable, which is your inventories and prepaid items, then committed fund balance, and then the unassigned fund balance for the general fund, which was 71.6 million at the end of the fiscal year. And then we can see all the way over grand total fund balance for the county's grand total for the governmental funds, 112 million at the end of the fiscal year. The next exhibit is 2 pages over. This is Exhibit 5, the Statement of Revenues, Expenditures, and Changes in Fund Balance for the county's governmental funds. Again, this statement reports the revenues, expenditures, and then the change in fund balance during the fiscal year. Again, multiple columns for the various funds, general fund, and then the other governmental funds. Total revenues during the fiscal year, 321 million for the general fund, 357 million grand total for the governmental funds. The next section shows the expenditures during the year, 271 million for the general fund, and then a grand total of 419.5 million for the governmental fund, grand total for the governmental funds. And then as we go towards the bottom, we can see the net change in fund balance during the fiscal year. So the county's general fund balance increased 21.8 million during the fiscal year. And then grand total governmental funds totaled 24.6 million increase in the fund balance. The next section of the report is the notes to the financial statements. The notes to the financial statements, this discloses the significant accounting policies that the county uses to prepare its financial statements. It also provides some more detailed information behind some of the numbers that you see in the financial statements. So for example, if we go to PDF page 57, this note shows the details of the county's long-term debt obligations. So the first table in this note shows the beginning balances, the increases, decreases, and any balances of the long-term debt for the county. And then the next section shows the annual requirements to pay down that debt over the life of the debt. And then the next section of the debt note, this gives the detail of all the individual debt issuances that the county has outstanding. Excuse me. So the next item I'd like to highlight is, I'm sorry, it's Exhibit 12. It's PDF page 114. This is a budgetary comparison schedule for the county's general fund. The schedule has columns for the original budget, final budget, and then actual numbers. So we can see how actual compared to the budgeted numbers. So for the general fund, total revenues budgeted 300 million was budgeted for the fiscal year. The actual that came in was 321 million. So we had a positive variance where the actual revenues exceeded budget projections by 20.3 million during the fiscal year. And the next section shows the expenditures, again, budget to actual, and this breaks down the budget and actual expenditures for each department. And then as we get as grand total of expenditures, grand total budgeted expenditures 292 million compared to total actual of 271 million. So again, a positive budget variance of 20.7 million during the fiscal year. Next couple exhibits I like to point out are the school board's exhibits. School board's exhibits start on PDF page 156. This is exhibit 44, which is the balance sheet for the school funds. In this exhibit shows, the columns for the different school funds that the school board has. New to this exhibit this year is the school activities fund. This was added to this statement this year because of the implementation. There was a new GASB implementation this year, GASB 84, which changed the accounting and reporting related to fiduciary activities. So as a result, the school activities funds are now reported in the school board's financial statements. And total assets for the school board, 88.6 million. Total liabilities, 25.3 million. And then a total fund balance for the school board's funds, 63.2 million in total. The next exhibit, 2 pages over, and this is school board exhibit that shows the statement of revenues, expenditures, and changes in fund balance. Again, this reports revenues, expenditures, and changes in fund balance. during the fiscal year, 279 million in total revenues, compared to 231 million in total expenditures, and then net change in fund balance, 48 million during the fiscal year for the school board. A big piece of that, though, is related to the new debt issuance, the bond proceeds that the county issued. The next item I'd like to highlight gets in back into the compliance section on page 187. This is a schedule of expenditure of federal awards. This schedule lists the various federal grants that the county expended during the fiscal year. And if we go down, so if we go down here, we can see the CARES fund was a big piece of the schedule this year. A little over 18 million was expended related to the CARES Act fund. And this was one of the items that was one of the programs that was audited, of course, because of the size, as a major federal program. So again, as part of the audit, this was a big focus on the audit this year. We looked at the expenditures that the county expended on the CARES Act, related to the CARES Act, and looked at the compliance of that. So on the last page of the report, the schedule, findings, and question cost. This is basically a summarizes the document as far as financial statements. Again, unmodified opinion, no material weaknesses or significant deficiencies. No federal award findings in question cost. This lists the major federal programs that we had to look at for compliance. Again, the coronavirus relief fund, the CARES Act funds, and then also the CARES Act funds related to the school board. Both of those were a big part of this audit this year. And then again, that there were no financial statement findings or federal findings or question costs. Also, there were no findings for the prior year. So again, this page, the last page, kind of summarizes the documents and the results of the audit. But those are the highlights of the financial report. Again, it was a clean audit for the county. Really no other concerns that really needed to be issued in a management letter. Last year, we discussed, a clean audit last year, but there were some areas related to getting the audit completed related to federal grants and also capital assets, and getting those pieces completed in time to get the audit done in time. There was those pieces took a little longer than anticipated last year. We did, as part of the audit this year, we did see improvements in that area. As far as the federal grant information, we received that information when we started our final field work in October. So the county did an excellent job of getting that information ready for us. And then also the capital asset piece of the audit. Again, we got that sooner than what we did in previous years. So it was good to see those improvements.
Thanks, David. Is that the conclusion of your comments?
Yes.
Awesome. Thank you. Before I get into some of my comments on what David mentioned, I wanted to see if any of the committee members had any questions. David, do you mind taking down your screen so we can see the full committee? Thank you very much. Does anybody have any questions or comments of the auditor?
I have questions, but I think it would be better to wait till after you give your information, because it might answer my
Great.
questions.
Mhm.
Okay.
Supervisor Galloway, did you have?
Is other people noticing that the mic is cutting out every once in a while? Or is that just me on my end?
I didn't have any mic. I didn't hear anything.
I didn't have any problem either.
So it must be on my end. It's like a consistent every certain time frame. It'll cut out for like 3 seconds or 4 seconds. I can't hear, but
Okay.
got it. No
Sorry about
worries.
that. Anybody else? What I wanted to share with the committee, particularly because the last few years, I think 2 years ago, there was some stress and some strain that came out through this audit committee about some of the challenges with getting an audit concluded. And last year we made some improvements, and this year it's better. And I wanted to reflect though on some of the intentionality around why that happened. As we mentioned to the Board of Supervisors on Wednesday, we talked about our cost allocation plan, et cetera. But one of the things that was in there was the development of a grants unit, where we have a grants accountant mixed with a grant administrator. That piece is part of the reason why we were able to get our CFA, which is the schedule that he showed you, of all of our grant obligations, federal and state-wise, done more quickly, because we're developing a foundation where we can more easily pull the information. It's structured, it's consolidated. And that was based off of, last year, it was really difficult to do that because we waited to the end of the year as we were going through the audit to pull it all together. And now we're developing where we have that information as we go along. So I'm very, very happy with those comments by Mr. Foley. The second piece of that is the capital or fixed assets. This was another area of concern for me last year because we didn't have a fixed assets accountant. And so much of the accounting for that happened at the end of the audit year. And it was really hard for us to pull off finalizing the audit because we didn't do the work throughout the year. And so we put aside and reclassified one of our positions to become a fixed asset accountant. And we just got that position filled a few months ago with a temp employee who I think is coming on board full time. And so that effort will continue to pay dividends as you're nurturing these two programs that were really hard for us to administer over the last few years. And so we've got dedicated people doing that. The third one, and David, once we get the questions answered, I do want you to talk a little bit about GASB 87 and the leases requirement. This was brought up last year as something that we're going to have to be compliant with for this fiscal year that we're currently in. And this is still an area that we are building. We're building the structure. Between the schools, we're going to have significant leases. We're going to have significant leases. Those are not captured, classified, coordinated, structured in a way that's super simple for us to know exactly what our leases are in compliance with GASB 87. But we are building that right now. Shenandra Usher, who's joined us, is our assistant CFO for operations. And so the controller works for her. Right now, the controller is vacant, but we're hopeful to make an offer within the next few days for that position. But this structuring and getting the leases, Shenandra's already working on this, is going to help us be compliant with that for the end of this fiscal year. But David could talk a little bit about that later. But those are really the comments I had. It was more structural, and some of the things that I've watched while I've been here for a year, not quite a year and a half, and what we've put into place to have a better audit process. Haven't talked at all about the numbers, but really it's that process for making sure that we can get an auditor in here to do their job well. And I'm really happy to see some of the improvements that we've made in the last year and a half. So with that, that concludes my comments related to the audit process. Any Supervisor Palmer, do you want to share?
I'm both just curiosity questions. David, you had the CARES funding at 18 million and you had the end of year variance for general government at 20 million. How are they related? Tell me where in the audit is the actual CARES money filtrated into the end of year variance for general government?
So if we go back to exhibit 5, this shows this is where you can see there's a separate fund here for the CARES Act funds. So we've got 18.
David, do you want to display that? Do you want to display that?
Oh, yeah.
So you can see it.
Thank you. That would help.
Yeah, sorry.
I sort of remember it, but not that well.
Yeah. And so if we go back to exhibit 5, so this shows the revenues and expenditures during the fiscal year. So there is a separate fund here for the CARES Act fund. So you can see the 18.2 million in revenues here. And then you had those expenditures of 18.2 million in this column as well.
But they weren't budgeted, right? I mean, the end of year variance was the difference between what was budgeted and what wasn't. I'm sorry, I should just let you answer the question.
So what you mean I guess so what is it, were they budgeted?
So what you said was you said this was budgeted, this much was budgeted, the 300+ million.
Yeah.
And the end of the year variance was the 20 million. And I'm assuming the CARES money wasn't actually budgeted. That was extra. So
right, the CARES money was not included. So those budgeted figures that and I've got the exhibit up here, exhibit 12. So this is just these numbers that we're looking at here. This is only the general fund. This does not include any of the CARES fund.
Oh, okay.
Because that's sitting in a separate fund. So this exhibit,
Okay.
this is solely general fund. So
Okay.
these numbers do not reflect the CARES funding because that's in its own separate fund.
Okay, that clears up. I've just been a little bit confused on the accounting of that, and I guess that sort of explains where.
And that's why it's nice being in its own separate fund. One, you've got the accounting there, and then two, I mean, it's just all sitting separate, so you can see, okay, this is what we had on the CARES funding, and then this is everything else, and it's not kind of commingled and trying and determine, getting the two mixed up.
Okay, my next question is a very, very general question, and it is not meant to criticize in any way whatsoever. It's really from my information on what auditors do. At the beginning of the year in the spring, we always get a paper of responsibilities and expectations, and this is what the auditor's job is, and this is what staff's job is, and blah blah blah. And I'm wondering how, and it's not your job to give advice, but and I'm going to use the example of what we got recently, which was the outside agencies and the cost allocation report. And clearly something like that, if it's done, we have to have the staff. And so this isn't any, suggestion that anybody should have done this sooner or anything like that. I'm just curious, when you're going through an audit of any local government or whatever, do you make suggestions like your life would be a lot easier if you would take the time and take the staff time to make this change?
Yes. Yeah, we do that as part of it. So when we're going through and we're looking at processes and procedures and going through the audit. You know, if we see, you know, because we do so many of these, we see, you know, how a lot of different governments operate. So if we do see, you know, items, you know, as we're going through, it's like, hey, have you ever thought about, you know, doing this? Or, you know, we certainly will, you know, make suggestions as we see that. You know, in addition to just making suggestions, you know, we're also, you know, we make ourselves available. So if the, you know, if the county has any questions, they can always reach out to us as well.
Okay. And so are there any things that, you know, given, and I'm sure Nelsie will find them all, and I'm not, I'm not in any way suggesting that there's things out there that she hasn't seen, but are there any things that you guys kind of put on your list that, you know, when you have more time and staff time and consultant time and all that, that the county should be doing differently?
We didn't see anything really that I mean, you know, other than talking about, you know, trying to get processes in place for those couple pieces that kind of hung out there, you know, and getting the audit completed. You know, again, I think overall, I think, you know, the county has, you know, good processes in place. And they're always, you know, looking and improving those processes as well. I know there was some changes this year regarding the bank reconciliation, and while I mean that the bank reconciliation has always been done, there's never been any issues. There were changes made to make that process even easier than what it was before. And you know, and we worked and talked to with Daniel and some of the folks at the county about that. But you know, really, again, nothing significant stood out as like, you know, you know, any concerns or areas that you could change for, you know, significant improvement. You know, I will say just you know, in general, now while everything, you know, turned out good, and I mean compliance wise is good, it's just, you know, focusing on, you know, there's with all this CARES funding and different pots of money, you know, compliance is just a big issue and concern, just making sure, you know, we're complying with all these various program requirements, and you know, just making sure we have procedures in place to ensure that that's happening. And you know, through the audit process, I mean, you know, the results speak for themselves. The county does have that in place, but you know, it just seems there's just more and more of that each year. So it's just always something, you know, that we want to pay close attention to.
Okay, thank you. That's it for me.
Thanks, Supervisor Palmer. One of the things I had on my list and I forgot to mention that Ms. Usher and I have been working through and thinking about kind of the future of where we want to spend our efforts and focus. And currently we do not have a fraud, waste, and abuse hotline, which is typical particularly for a jurisdiction like ours. And so as part of FY23, you'll see that kind of in our budgetary proposal, if it makes it into the county executive's budget recommendation. I just now realized I might have did a faux pas. Sorry, Jeff. That is one of those places that we want to look to put some effort and resources. And then also, you know, we don't have an internal auditing function in the county. And I think that this has come up, I've been told before, many years ago. And it is something that we're looking at as we start to get our footing for where we are and stabilize our department, that we don't just need to rely on an external auditor once a year to come in and test our control. So they just do samples, right? Samples of our internal controls. We want to be more proactive and more robust on the internal control side. And so that is something over time that we're looking at developing some protocols, some procedures, policies, and we'll likely have some dedicated resources to do that in the future. And so those are areas just to give you a little sneak peek at some of the things that we're thinking of and where we as financial professionals would like to see some differences in the future. Jeff, Mr. Richardson.
I would piggyback the comments by Ms. Birch, and Liz, I really appreciate your questions. I hear it all about continuous improvement is what I hear with Ms. Palmer's questions. It's continuous improvement, and I appreciate that very much. I think school board and the board of supervisors, I think, and I don't want to step out of line with Mr. Zimmerman and Ms. Schmidt to speak about the school board. They certainly know much more about that board than I do. But I think both of those boards set a tone of, we want to get better. We want to be better. And so your questions are very welcomed. I would just also add that we are really working hard and spending time, energy, and money as it relates to what I would refer to, it's a sports metaphor, but it's the blocking and tackling. And what I mean by that is things like payroll, being able to do payroll and not make mistakes and not mispay people and not have to go back and recalculate very complicated human calculations of having to pay people. We have a payroll with our staff from both schools and county government. We have a staff, a normal payroll run for a month would be what, Nelsie? Just off the top of your head, approximately how many checks? Just off the top.
It's at least 4,000. So maybe
Yeah.
6,000 with.
Yeah. So we're a large employer. We're a medium-sized county and a medium-sized government. But when you combine all that together, that's a large employer. And so we ought to be able to do those basics without the gyrations that we've done over time, where we are hopeful that it will go well or hopeful that it'll be accurate. It should be accurate the vast majority of the time. And so we're spending a lot of dedicated effort there in that world of wage and hour, in that world of the complicated world of getting people's pay right. And so those are things we're doing too, because I think those are things that, that we as an organization should be really good at, and not expect our employees to be great at catching little things, but rather we should eliminate as much of that chance for little things going wrong. And you do that by systemizing your systems, your processes, and eliminating as much human error as possible. I think that's also a part of what we're talking about today. So thank you.
Yeah, thank you, Jeff. And I have a feeling that in next year's audit, because we are switching to a third-party processor for our payroll, and we've completely revamped our payroll structure, that will be an area of greater focus in our audit and testing, because there's been so much change. So that will likely be there. And David is shaking his head. So
yeah,
yes.
anytime you change processes, we gotta dive into that.
Any other questions or comments from the members of the committee? Yes, Mr. Galloway.
Well, I mean, I want it to be noted, it follows up on Liz's questions and Jeff's comments. I mean, this was brought up, what, a year, 2 years ago. Staffing, I think, was the first maybe thought or answer, but it's really been a combination probably of staffing and the system improvements that have been put into place. So, what Liz brought up did happen 2 years ago, or a year, maybe it was last year. Time is interesting the last couple of years, but the auditor brought that up about the timing of getting the information over, and could improvements been made? And those improvements have clearly been made. That's what David pointed out. So good job on that, Nelsie.
Really appreciate that. And one more person I'd love to introduce you all to is Lindsay Huff. I'm not sure if you've met her. She's our chief accountant. Lindsay's been with the county in various capacities, both on the school side and the county government side for many years. But she has taken the helm of our accounting group and has been really, really helping to restructure and rethink the way we do things in accounting with her team. So kudos to Lindsay. Lindsay was also majorly involved, Supervisor Palmer, in the CARES funding and the accounting for that. And so she is typically the person that I would go to ask my questions, because she helps set us up for success so that we can easily report out on that CARES funding. So that is Lindsay. So I wanted to introduce her to you all. And this may be the last time you see Lori, so she's here. But if there's nothing else from the committee, or staff, I will make a motion. Can I make a
What
motion?
about Gatsby 87 and
Oh,
leasing?
yes, sorry, I
Yeah,
was
let's talk-
so
yeah, let's
excited about this. I was like, this is amazing.
Sorry, I just.
Yeah.
David, please, can you?
Yeah, no, I think this it is a great thing to talk about. As we've, as we discussed over probably the last 4 or 5 years worth of, audit committees, we keep talking about, oh, this upcoming standard, GASB 87 lease standard, but we got time. It's 4 years away. It's 5 years away, and we keep talking about it each year, but now we're to the point where GASB 87 is upon us. We're actually you all are in the fiscal year which this applies. So, and what GASB 87 is it basically, it changes the accounting and reporting for leases. So under the old standard, what we've always been under, there was 2 categories of leases. There were capital leases and there were operating leases. So capital leases are treated as basically like debt. It's you lease purchase a vehicle, equipment, items that the county's gonna own. And it's basically just a financing agreement. So with a capital lease, if you finance a vehicle or equipment over 5 years, and then you take ownership at the end of that, that you recognize an asset, and then you actually recognize a liability for that lease. Whereas operating leases, if you're operating, if you're leasing office space, or if you're leasing equipment that you don't really take ownership of, those have been termed operating leases. So operating leases, you don't ever put the asset on the balance sheet, and you don't report a liability for that. Basically, with an operating lease, you just show those as you pay those monthly expenses. It gets reported as an expense as we go forward, as you pay that out over the term. What GASB 87 does is it says, well, we're not going to differentiate between those two anymore. And whether it was considered a capital lease or an operating lease, again, it's not distinguishing that. So all leases now are basically being treated as like a capital lease. For all leases, you'll have to recognize an asset. It's basically like a right to use asset that will go on the balance sheet, and then you'll also have to recognize a liability on the balance sheet as well for this. And this doesn't affect your fund statement, so it doesn't change anything as far as how you budget or that. It's just on the entity wide, but it's still, a big part of this standard is going to be to, the easy part of the standard is do the calculation, right? So figure out, okay, these are the total lease payments. These are the total, this is the remaining life of the leases, and these are that, put an asset equal to that. So the calculation is more of the easy part, and we can help provide tools to help do that, help the county do that calculation. The hard part is figuring out, well, what do we have, and figuring out what's the population, what's the universe we're working with. And so that's the piece right now that I know the county is already started this process, and working on gathering all the what leases are out there. But that's the big upfront part that has to take place in order to implement the standard. There's a lot of standards that come up and may have an effect on the financial statements, but getting the information is not too hard, and it's we'll just get it done, put it in the financial statements. This is a standard that there's a lot of upfront work that has to be done to get this one implemented.
And if I can underscore that and connect it back to something the Board of Supervisors has been hearing a lot about, is our core systems modernization, and that we've got to ready ourselves also for new systems. So there's 2 things happening to us that in the future, this will be so much better. First of all, the acknowledgement that we have to actually identify a lease differently so we can grab that data set and report easily out on it. Right now, we've never done that. We don't know that. So there's these leases all over that unless you can search in a system for leases and it shows up so beautifully, we will never know that it's there. So like, for instance, we could say Canon, do we have any contracts with Canon for copiers? And hopefully that'll produce some things, but it's not necessarily connected if we search for another nondescript vendor that isn't Canon, but actually was a lease. So we don't have the procedure in place. That's part of the difficulty. And then our systems and the clunkiness and the disconnection, it's not an easy thing to go and grab and be able to produce leases. So Shenandra right now she reached out to Jackson Zimmerman just this week and saying, Jackson, what are the leases you all have? It's that rudimentary that we've got to go and be like, what you got out there? Because we don't have the process or the system that does that for us now. We're building it, and in the future it will be much easier. But it's going to be a pretty heavy lift for the team over the next few months to capture this in time for our next year's audit. I wanted just to connect that. So it's not just a good system. It's also the procedure has to be put in place that we need to capture that data set so that we can grab it later. So that's how the two work together. Any questions on that? Okay, did I miss anything else? I don't believe so. Any other discussion from anybody? So sorry. Do I have a motion to adjourn?
I'll motion to adjourn.
Second? Cool, all in favor? Aye?
Aye.
Yes, awesome.
Bye.
Great, bye. Thank you all.
Happy Thanksgiving.
You too.
You all.
Well,